Investors will get a gauge of how well or not well Yahoo has done as it reports fourth quarter earnings after today's closing bell. But aside from actual results, investors will be looking for clues from CEO Marissa Meyer, who remains in the spotlight for better or for worse. Joining us now to break it all down, Dan Costa, editor-in-chief at PCMag.com. And Dan, this Yahoo story, it just gets more complex. The players get a little bit more intense all the time. Since Marissa Meyer joined Yahoo, her plan was to help grow and help redefine one of the internet's most beloved companies. In those words, in short, where did she fail?
Well, so I think she got brought in to do two things, right? She wanted to change the culture of Yahoo, turn the company around, but also, change the culture and provide some buzz to a brand that frankly lost a lot of its luster. And I think on that regard, she's actually done a pretty good job. There are more people talking about Yahoo now than there would have been before she got there. So I think in terms of changing the culture, whether that's for better or for worse, I think she's actually made a lot of changes. The other thing she was supposed to do was actually change the product mix, improve their products, and solve problems for consumers and really get back to engineering. And that's where I think she's fallen down. There aren't a lot of great Yahoo products that have come out in the last couple of years. And that's where I think that it's been a bit of a disappointment.
Now it's expected, Dan, that Marissa Meyer will unveil a plan to slash costs and close several business units, a culling, if you will. What units will close, in your opinion? Does this impact her proxy fight with activist investor Starboard Value and Jeffrey Smith?
Yeah, I mean, I think she's got to, Yahoo is a 20-year-old company. It's important to remember that these initial first wave of .coms are getting kind of long in the tooth. And over time, they pick up business units, they pick up divisions, they place bets that don't pan out. So I think some of this is natural, and it's something that's actually you're really going to want to see from a 20-year-old company. But she's made some bets on her own in the last couple of years. She's bet big on media. She's bet big on bringing in very high-end, costly editorial talent. Some of those bets have paid off, and some of them haven't. So I wouldn't be surprised if some of those media properties get trimmed back. But fundamentally, Yahoo is still a media business. They make money on advertising. They have a ton of audience, a ton of eyeballs on them. Making money off those eyeballs is what they do relatively well. So it'll be interesting to see which division she actually shutters.
All right, so since joining Yahoo, Marissa Meyer has had this system, right? This rating scale for employees, a scale of 1 to 5. It's these ratings that have been used to fire hundreds of employees. Now, on Monday, a former manager at Yahoo challenged this process in court. Yahoo's a huge company. So what exactly is going on here, and how do you see this working out on the employment front in this particular suit situation?
Yeah, I mean, in any individual suit, you don't want to put too much weight on one person's lawsuit or one person's problem with the system. But if you look at this system, it's quarterly appraisals every 3 months. Everybody in the company gets a rating, and then the bottom performers are weeded out and sent packing. They don't call it layoffs, but effectively, it is a staff reduction. And there's two problems there. One is that you're sort of creating a culture of turnover, which Yahoo, you've seen a lot of executives leave. You've seen a lot of the staff turnover in the last couple of years. You don't want to have a culture of turnover in your company. And then the other part of it is that it's yet more bad press. And that's not the type of headline that you want out in the papers, you want being discussed on CNBC, when you really want to focus on quarterly returns and turning the company around.
All right, so let's put this all in perspective here. Marissa Meyer has had some higher profile failures. She's also had some higher profile successes, like you said. So on balance, where do you see Marissa Meyer in 2 years' time?
It'll be interesting to see what plan she comes out with today. She's made some bold bets that have paid off. I mean, the Tumblr acquisition was $1 billion. It was a social media platform that's been growing over the last couple of years, and it has the potential for really keeping Yahoo younger and appealing to a whole new demographic of users. You imagine what might have happened if Yahoo had bought Instagram, for example, which was also available that Facebook snapped up. The company would have an entirely different profile now. So I think that she's still got the chance to make some of those bold bets. The question is, how much longer can she hold on, and how many more of those bets can she place before the board and the market just get tired of this routine and want new leadership?
Well, Dan, it sounds like Marissa Meyer and Yahoo both yet again at another crossroads. So, of course, today's report will be huge. Thank you very much, Dan Costa, editor-in-chief, PCMag.com. And thanks for watching. I'm Dominic Chu. Have a great day.
Hey YouTube fans, I'm Landon Dowdy from CNBC. Thanks so much for checking out our channel. Here you'll find videos packed with all the info that you need to be smarter about your finances. Be sure and subscribe by clicking right here and click on all the videos around me to see CNBC's original series Young Money, Tech Bet, Kramer's Mad Money, and all the latest from CNBC.